it gets you to buy something like Bitcoin when it's at 65,000 just before it tops, because everyone's just so excited about it. And so you get that emotional response that is like, oh, I've missed the boat, but I'm going to jump on now. And of course, that's the wrong time to do it. And same thing on the other side where, people that are in investments, when the markets are at their lows and things are just so bleak, it makes you kind of say, all right, I just got to get out because it seems like the world's going to end. And that's actually the time to buy. So for me, it took me a long time, but by letting the charts tell me what to do in terms of looking at specifics on the charts, it really allows you to take emotion out of it, meaning that the charts just tell me what to do. I don't pretend to think or don't have any sort of kind of, feelings on the matter. I shut that off. And then looking at the charts, it really does just tell you the purity of it. And what's amazing about the charts is that charts represent human emotion, really. And so by reading and almost playing counter trend to human emotion, you're able to actually make money. And again, people might say, well, why are charts emotion or human emotion? Well, because buyers and sellers are humans, right? I mean, people are buying stocks or selling or buying crypto, selling crypto. And basically a chart as it goes up, it's telling you people are getting greedier and they're running and chasing it, and vice versa on the downside. So really that's what a chart represents, is that the emotion of the investing public. And it's weird because if you're a contrarian, if you know how to read that and go opposite, that's where you'll find the big money in investing. I mean, it just like anything, it takes study, right? So I always like to tell people that you can't expect to come into the market and remember, you're facing like billion-dollar algorithms that Goldman Sachs and these bigger companies build, and they're sharks. I mean, think of great white sharks, and we're kind of like the seals in the water. So you have to learn how to avoid the kind of the pitfalls there of that kind of stuff. So if you're going to be a brain surgeon, right, you have to go to school for X amount of years, you have to study and all this stuff, and you have to pay. I mean, think about the amount of money, right? So the same thing applies to investing. If you want to be a pro, if you want to be someone that's making money, you're going to have to put some energy and effort into studying it. So that's number one. But I think number two is that, the charts, what I've found is that when you have specific rules, and this is the discipline of trading, is that when you have specific rules that you abide by, you start to recognize that, okay, I've done this type of pattern trade 50 times or 100 times, and out of 100 times, it works out 80% of the time. So as long as you have those probabilities on those pattern formations and you actually know what to look for, then you actually start to become the casino house versus the gambler. Like the gambler walks in, generally 1,000 gamblers go in, most of them will lose, one or two may win, but you want to be the house of the casino. So everything I do is based on this pattern forms X amount of times, and it makes this move X percent of times. Specifically in the crypto markets, and this isn't as much for the stock market because you still have these institutions that are holding Apple and so forth, but the crypto markets are driven by greed and fear, right? I mean, there's so many small investors out there. So what that does is it makes crypto go much, much higher than you think it can go and much, much lower than you think it can go, because there's so much retail kind of emotion that's being pushed either way. Now, if you look at a stock like Apple, I mean, you have Warren Buffett owning a huge amount. He's not trading. He's not panicking in those scenarios. So you don't get that same sort of crazy, ridiculous moves. Yeah, so right now it's a wild ride. Crypto is absolutely a risk asset, which means that when people are panicking and the markets, we are seeing the stock markets going down, crypto is going to go lower. I do think eventually crypto settles down and becomes more of a mature asset, especially Bitcoin. I really do believe that Bitcoin will be the future digital gold out there, where it'll be a store of safety. But, what I always say to people is keep in mind that Bitcoin has only been around since 2009. So it's effectively a 13-year-old. So we can't look at it and say, you don't look at a 13-year-old and say, okay, you need to act like a 50 or 60-year-old or a grandparent, right? They're very emotional at that age. They're very kind of off the wall. And that's the way crypto's behaving, because it's a young asset. Now, if you look at gold, right? Gold has been around is used as a store of safety for thousands and thousands and thousands of years. And it only moves like 1% on a crazy day, maybe 0.5% on a normal day. So you get much more of a stable, mature asset in that respect. So eventually I think crypto grows into that, but it's just such a new asset right now that it's very, very volatile. People are still trying to figure it out. Absolutely.
That's it for today, guys. If you found this video useful, then don't forget to like the video and share this knowledge with your friends and family. And don't forget to check out the full video. Link is in the description. Thank you.